today. Kevin Hincks, co-host of Fast Market Live at the CBOE, is with me, and there's been a lot of talk about what goes on with bond yields, coupled with Trump's visit to the Fed, checking out the construction. Your thoughts?
Good morning, Nicole. Yeah, it's all one big topic, isn't it? It's interest rates, it's the Fed building, and if you saw clips or saw bits of the interview yesterday with President Trump and Jerome Powell, it was peak awkward. It was cringeworthy as two men that clearly are at odds with each other, standing next to each other, having a conversation live on the air. And it's, we don't care about that. The trading public does not care about the price of the Fed building. What we do care about is interest rates and what the Fed is going to do next week with interest rate policy. And no one expects them to lower interest rates, but if they start, like we've been talking about for a couple weeks now, if they start to pivot towards lowering rates in September, the market would like that. Now, if Jerome Powell doesn't do that, remember, the meeting starts on the 29th, which is Tuesday. It ends on the 30th. So on the 30th, we'll get the press conference and the announcement. And so that press conference and Jerome Powell's pivot, potential pivot or not, will drive markets on those days. But as you know, Nicole, if you look at the calendar for next week, there's massive amounts of top-tier economic data, and there's massive amounts of large cap tech earnings. I've got 164 names in the S&P next week, 30 in the NASDAQ, which include Boeing, United Healthcare, which is down 50%. That's going to be a huge earnings event. Visa and MasterCard, Meta, Microsoft, and Qualcomm on Wednesday afternoon. Apple and Coinbase on Thursday afternoon, and then the energy companies Chevron and ExxonMobil on Friday. It's going to be a massive week, and that's just earnings. I didn't even get into economic data yet. We've got JOLTS. We've got consumer confidence on Tuesday. We've got ADP and GDP on Wednesday. Thursday, jobless claims and personal income and outlays. And then August 1st, the first day of the month, we're going to get jobs data for the month of July. A massive week for earnings, a massive week for economic data, and, oh, by the way, a Fed meeting, Nicole.
Yeah, I always used to think that if it were a first of the month on a Friday, they wouldn't give the jobs data, but I guess that's old news. Let's talk about,
They have done that in the past. You're right. Sometimes when it's early, they wait and do it the next week. I guess not this week. I don't know who makes that up, but it clearly isn't me because it's not consistent.
And meantime, what about, thanks, Kevin, you made me feel a little better. Durable goods, really interesting to see what's been going on with the economy. We've been relatively strong. I mean, jobless claims came in for the 6th week in a row. Obviously showing some good news. People have jobs and such, fewer claims. Your big picture on some of the economic data.
Durable goods that we got out at 8:30 Eastern time. Think long-lasting manufactured goods, things you would keep for more than 3 years. That falls in the category of durable goods, and it's a volatile number. Why? Airline orders makes these numbers volatile. How do I know? Last month, up 16.4%. This month, it looks like a horrible number, down 9.3%, but they were looking for down 11% because of airline orders or lack thereof. They come in bunches and they make the headline number very volatile. Now, take out transportation and the number smooths out to an up 0.2, a tenth better than expected. Here's the one concerning number. Core capital goods, down 0.7. They were looking for up 0.2 on that number, so that number is a pretty substantial miss there on core capital goods. So that number, I would call it mixed to slightly negative, although you can discount the headline because of those transportation orders. So, all things considered, durable goods, ex-transportation, up 0.2, a solid number, but a little volatile, a little bit of miss on the core capital goods number. Nicole?
Overall, I I think so much about the Fed here in focus. I mean, I was reading from Ben Emmons. He was talking about the bearishness of bonds, the concern on bonds. We've been pretty steady here at 442, but what will the Fed do or not do? And I think that's definitely a big story. I mean, people have been looking to Bitcoin and equities, and usually bonds were our safe haven, and now we've been sitting here and sort of what's next, and the long end of the curve as well is really in focus.
Well, here's my views on yields and the bond market. The most thing you could say about the bond market since really February, it's been very quiet. It's been almost a straight line across with very little volatility. Now, it did go from 4.8 to 4.1 in that the end of the year until probably early March, but then it has smoothed out and been very consistent along the way. Is that going to change? Is Jerome Powell going to pivot to lowering rates? Are we going to get to 2 cuts this year? We're going to find out a lot Wednesday during his press conference. Does he make the big pivot like some of the Fed members that have been speaking have been talking about? July rate cuts. No one expects a July rate cut. However, everyone is starting to lean towards a September rate cut. Remember, there's no August meeting, so the next meeting after this one will be September. Do they start to guide to that cut? That's what the market is starting to build in and expect. But rates, everyone's talking about rates. Look at rates since March 1st. They've been very flatlined across the last couple months. So that's what I see when I look at the bond market. It's been relatively mild or benign, Nicole.
Yeah. All right. Kevin, Hincks, good to see you on this Friday. And thanks for such a great look at what goes on next week, too. We really appreciate it. Thank you.